Hello everyone. Today I will talk about how can a company owner and director take money out of their company in the most tax efficient way. I get this question asked a lot from my existing clients and prospects, that what will be the most tax efficient way for them to take money out of their own company, that is, what is the most tax efficient way for them to pay themselves. So the most tax efficient way for a company owner who is also director of the company to pay themselves is by paying themselves a combination of salary and dividends. You should utilize your tax-free allowance and pay yourselves just under the tax-free allowance and the national insurance allowance. And in that way, you'll be taking a salary, utilizing your tax-free allowance and not paying any national insurance contributions as well. And then anything above that, you should take out as dividends. And the reason for that is that when you take salary, you have to pay the tax, the employment tax. Your company needs to pay national insurance contributions, which are employees' national insurance contributions, and you yourself have to pay employees' national insurance contributions. Obviously the employees' national insurance contributions and tax, they will get deducted off your salary. So you're paying tax and national insurance, and a basic tax rate is 20%, but that's not the only thing you need to take into consideration. You need to take into consideration the national insurance that you yourself will be paying, that will be getting deducted off your salary, and the employer's national insurance contribution. So that's why it's important to pay yourself as a combination of salary and dividends. In terms of dividends, the basic tax rate is 8.75%, which is already less than the tax rate for salary. And even in the higher threshold, although the tax rate is higher, but even then, when you compare the combination of tax and national insurance for salary, the dividends work out better than salary. So that's why utilize a combination of both salary and dividends. So that's the basic way of paying yourself. Just one thing that you need to remember is that when you pay yourself salary, that's a allowable expense that gets deducted off your before your profit, so you won't be paying any corporation tax on that. But for dividends, you pay yourself dividends after your corporation tax has been paid. So that is another thing that you need to take into consideration. On top of this, another tax efficient way of taking money out of your company is by contributing into pension. So if you contribute into pension yourself, you can contribute into pension, and your company can contribute into pension. You can a percentage of your pension will get deducted off your salary, and a percentage will be paid by your company. So that is a tax efficient way as well to take money out of your company and future-proof things. And another most important thing is to claim all business related expenses. Any expenses that you make which are relevant to your business, definitely pay those via your company, because that will reduce your profit and ultimately reduce your corporation tax. So that can be a point for taking money out of your business. You're not taking money out directly from your business, but you're just claiming for every business related expense through your business, and you're ultimately reducing your profit. And lastly, I would like to say, do tax planning regularly. Speak to your accountant or financial advisor regularly, and stay on top of your income and your tax situation, and have your tax planning in place, and review it at regular intervals as well, maybe after every 1 year, after every 6 months or something, depending on how frequently your income is changing. And lastly, speak to an accountant, take an accountant's advice, because they can do more detailed calculations for you depending on your level of income, and advise you better, because this is not an advice, this is just a guideline. So definitely speak to an accountant, explain your situation to them so they can advise you specifically according to your circumstances.